Welcome to Matters Financial and Geopolitical from a Frontier. Thank you as always for stopping by. I hope the week has gone well. Let's move to Kenya, where I've had about 6 results come out. Let's start with Britain. They reported a full year EPS loss of 92 cents a share. Gross earned premiums increased 4.4%. Net unrealized fair value gains losses on financial assets was over 3 billion shillings. Profit before tax was down 365%. Profit after tax down 519%. Earnings per share swung from a profit of 26 cents to a loss of 92 cents. There is no dividend. Total assets grew 4.67%. Cash and cash equivalents at the end of the year, 6.97%. The group returned a loss before tax of 2.3 billion shillings compared to a profit of 865.8 million in 2017. Unrealized loss in listed equities of 3.2 billion compared to a gain of 0.9 billion in 2017. They're saying their regional businesses contributed 18% to the group's top line. It would be good to know exactly what the composition of the fair value losses was. I suppose it's housing finance, amongst others. Insurance business eked out a 4.4% headline growth. If you didn't see an interview I did a while back with the Group Managing Director, Dr. Benson Wairegi, please have a look. And I also interviewed George Odo of Africa Invest, who was one of the recent equity investors into Britam, alongside Swiss Re and alongside the IFC. They're nursing losses of about 50% on the investment. Kenya Re reported earnings per share declined 36.399%. Gross premiums were up minuscule amounts. Investment income up 6.9%. Fair value gains on investment properties 397 million. Profit for the year down 31.955%. They reduced the dividend to 45 cents a share. Their profit was 3 shillings and 25 cents a share versus 5 shillings and 11 cents previously. They're saying high claims posted, impairment of an asset held for sale, significant devaluation of forex in one of our markets, significant drop in the share of profit from our investment in associate Zep Re. It's never traded above a price-earnings ratio of 5, which speaks to an inbuilt skepticism in the markets. Staying with insurance companies, Liberty Life reported earnings per share declined 15.574%. Gross earned premium revenue was down 2.63%. Profit before tax down 16.238%. Profit after tax down 9.8%. EPS down 15.574%. They haven't specified what dividend they're paying, but they're saying they're going to pay one later on. It's a conservatively managed franchise and evidently played defense in the full year 2018. Kakuzi reported full year earnings per share declined 18.6%. Full year sales up 11.647%. Profit before tax down 19.437%, earnings per share down 18.615%, dividend per share hiked 28.571%. The results for 2018 reflect a pre-tax profit of 684 million compared to 849 million in 2017. The lower profits are a result of lower avocado prices achieved due to a heavily oversupplied market in Europe. Talking of building a track record of steady dividend growth, a trend that we intend to maintain. Avocados, macadamia, nuts, but saying that there was a huge oversupply of avocados into European markets last year. Kakuzi produced a record volume of avocados from its orchards during the year. This, however, unfortunately coincided with the record production from Peru and South Africa, leading to a heavily oversupplied market in Europe and a devastating impact on prices. Tea prices continue to remain under pressure as Kenya produced record volumes in the year. It's a very attractive business. I like the way they probe and explore new markets, well worth buying and putting away. I like the product diversification. Housing Finance reported a loss, earnings per share loss of 1 shilling and 56 cents per share. Loans and advances to customers declined 12.49%. Full year profit before tax down 294%. They had a profit last year of 334 million. They had a loss this year of 651 million. EPS negative 1 shilling and 56 cents versus positive 36 cents last time. Let's hope this was the kitchen sink. National Bank reported full year earnings per share declined 98.413%. Profit before tax was down 41.872%. Earnings per share was positive 2 cents versus positive 1 shilling and 26 cents last time. How they got that positive number is a mystery to me and remarkable. No dividend. Finally, BOC Kenya reported full year earnings per share rallied 65.842%. However, EPS was 3 shillings and 35 cents a share, up 65.842%, but the dividend was maintained at 5 shillings and 20 cents. They're paying more out in the dividend than they're earning. And Stanlib Fahari IREIT, profit after tax up 13%, talking about portfolio's market valuation being bolstered by the contribution of a modern 3-screen cinema at Greenspan Mall, which is due to come on stream in the second quarter. Have a look at those results as well. A lot of people disappointed with that share. Might be a time to have a look at it and see if it's undervalued at this point in time. I wish you a tremendous weekend. Do catch up with me on Metropole TV. I know it's been a bit difficult to find, but we just started. This is, I think, it's my fourth episode. But it's most enjoyable and looking forward, to going fairly mainstream fairly quickly. Thank you for stopping by.